Hey, hi Kamlesh, how are you?
Good morning. All nice to hear what you were talking about. We keep discussing this at IRDAI forums about what does it mean mathematically if insurance for all has to be attained by 2047. The industry is growing at about 10-11% for the last few years, but we'll need to be at it to get to about 90 crore Indians at least to get covered by 2047. It will be a little more than 90 because I think Indian population will become 160 by that time from 140 or 142 that we are. And if you see who is insurable, I think we have a task really cut out for us for that time.
Yeah. So on that aspect, we're going to keep this conversational and not get into too detail. And the idea is to leverage the hat of a CEO and an MD and understand his challenges on the topic of a composite life insurance. Now, it's been spoken about, and the context behind the composite life insurance is, again, stemming from what Kamlesh just said a little while ago in terms of the numbers, as well as the larger issue of a penetration not actually achieving global standards of close to 7%. And with the regulatory framework looking at individual businesses in the insurance industries differently. And so there is a duplication of efforts, whether it's processes, whether it's technology, whether it's distribution, and a whole host of other things. And as a consequence of that, I think there is a thought behind bringing a strategic framework in terms of a composite license. And whilst many things on the composite license is still not very clear, but the approach towards the composite license possibly addresses the issue of penetration for all, addresses the issue of consumer, addresses the use of technology, and a whole host of other things, including capital. So what we will do is we'll get into a journey and hear Kamlesh's views on a whole host of topics under it. The way we'll build the conversation is a strategic framework as to why we are looking at the composite license, then possibly the challenges that may be encountered and how do we look at those challenges, and lastly, we will look at how does the future entail as a consequence of that. Kamlesh, is that fine?
Absolutely.
So the first question to you, Kamlesh, is we've been speaking about composite license and we are so used to numbers, penetration under 4%. We know the reasons, but from your standpoint of having worked immensely in the financial services industry and more so now in the life insurance industry for the last 6-7 years, why is this policy being spoken about? What is the need of a composite policy? I mean, why a composite license? What is the need as you see it?
I think the core thinking process is the need to shift from maybe a product to a customer. If you basically look at life insurance companies, health of life, you are focused on products and not necessarily a need of a customer. So if I look at composite license as a concept, I think it's the customer need, and there could be different segments of customers that we could talk about. But today, for him to be able to meet those needs, basically means he has to go to different people. The distributors are different to that extent. The product consumptions are different to that extent. Imagine women. You spoke about the work that we have not done in women, and I completely agree with you because that's completely underpenetrated in life insurance. Now, insurance companies find it difficult to put the idea of a child plan at the right point in time, whereas the need felt by a woman for maternity cover in health is reasonably large. The idea of composite, when you shift from just your product to the event or the customer at that point of time, is a unique opportunity to be able to say, hey, you need a maternity cover, the child is on its way, so it may be time to start looking at the planning for the child for his future and education at some point of time, and suddenly you've got two products together, but basically taking care of the need of that life stage at that point in time. You look at salaried customers as a segment, and imagine the ability to be able to combine the protection that you spoke about along with critical illness cover and hospicash for that matter. And today there are, again, like I said, different products, but not necessarily focuses on a solution for a customer at a given point in time. My sense is The whole idea of composite license, and we got to still see how it will come through the finer print when it eventually comes out, is the ability to be able to say, hey, you can do all of this. Now, whether life insurance companies will start doing health and general and all of it put together, or there could be options of what you want to pick and say, hey, this completes the suite of what I want to achieve. Because as a life insurance company very bluntly said, I remember my customer only once in a year when he has to pay his renewal premium. I don't remember him through his life stages, and imagine the opportunity for me to be able to say as a company to know what's happening to his health at different points in time. How can he build in the element of wellness at the same point of time? Can that bring the opportunity of pricing products differently at a point in time? And therefore, I think the host of opportunities, the idea of a composite license can bring in, both from a manufacturer as well as a customer point of view, I think is very, very immensely large.
No, I understand. So I'm just saying the benefits are immense, right? But fundamentally, this thought, I mean, besides what you just said, from a regulatory standpoint, the germination of the idea of a composite license, especially at a stage where the industry is 20 plus years, at least from the private insurance industry's perspective. Now, whilst the thought could be consumer at heart, right? Where do you see, what does it actually mean for the consumer? Because even today, the consumer doesn't understand life insurance as much as we want him to understand, because we have our ways. Possibly understands motor insurance in a simplified way because you're tagged to buying a product. Possibly does not understand health insurance, but the awareness of health insurance has increased post-COVID. And so looking at it from a consumer stack, apart from products per se, where do you actually see the impact in terms of the buying and the using insurance perspective?
I think you are right. You know, we often have this discussion that car insurance is far better penetrated. You can say whether it's now mandatory, but sometimes we wonder that human beings value the life of the car more than the value of their life themselves.
Correct.
And that, of course, is a reality that we got to sink in. I also have to admit, having come to the life insurance world, that people don't understand life insurance because I think life insurance companies often make their products very complicated. There is a need for simplicity, and I was discussing with Suresh, that when I came to this world after 25 years of banking, I realized that maybe one of the reasons is there's too much of life insurance experience in life insurance, so maybe we tend to complicate a little more, need for simplification. I think the Insurtech guys are doing a fantastic job in that area. But more in health than maybe in life. But I think from a customer point of view, the point that you are making, imagine the ability to be able to make sure it's like one KYC for all the products that you want to buy. You're not moving into different areas. At the stage of life that you are in, I think the awareness for health insurance is a little better post-COVID. That's got better. Like you rightly said, the general insurance guys are out with a campaign. The life insurance guys, and I chair that council, is just started the campaign about 2 weeks back. And the biggest thing that we found in our campaigns when we did the research was to say, awareness, you would be surprised, of insurance is better than that of a savings account. Is better than that of a fixed deposit. But there are two myths that normally come in the way of doing what you're supposed to do. We don't believe that anything is going to go wrong with us. Okay? So that's one thing at this point in time. And the biggest other product which we looked at was annuity. Imagine India is going to lose the young population status very soon because people above 60, which is only about 11% of our population right now, go at the same time in 2047 is going to be 22% of the population. Therefore, from a consumer point of view, the ability to be able to make sure on what you are consuming from one provider of solutions rather than products will change the way you are consuming altogether. Say Bima Sugam becomes a reality which the regulator is trying to do. Imagine the ability to underwrite risk and price for a customer can become significantly better, because I'd look at a guy who bangs his car more often as compared to a guy who doesn't in the risk profile when you want to underwrite either for health or for life put together. bureaus like Sybil have a model which now correlates your financial worthiness with morbidity and mortality both, and they are amazingly statistically relevant. My sense is consumers will get a host of new offerings through this entire process. I don't give benefit of protection price to a guy once he buys the product for the entire lifetime, but in Composite, if his health is fine, the ability to be able to change the price or make it better through the contract will become easier. And I think the whole experience of consuming insurance and not broken into health, life, and some parts of general will move away from what I say a product offering to what I need at different points of time. I think for a customer will get fulfilled easily, quickly, and maybe at a more efficient price than in a non-composite license world.
So essentially what you're saying, if I were to synthesize your answer, you're saying it could possibly be for the consumer a single point of contact for multiple services, could be claims, renewal, service at one level. You're also saying that it could be a unified journey in terms of policy purchase, premium payment, and possibly also looking at benefit tracking, and where I'm sure technology can come in there. And do you also see a potential for a lower premium as a consequence of operational excellence?
Yeah, I mean, for the company, I'm saying Composite means common underwriting processes, common claim processes, and distribution costs become significantly much better because you have the same advisor now who basically is able to take Composite license. So he'll become like a Composite advisor. I see the situation where we'll get what I call phygital advisors, where maybe a communication of the offering may happen digitally and the final closure may happen physically. Imagine banks that are distributing life insurance and all the products differently. A single RM will now become what I call a Composite advisor for that matter, which will make a hell lot of difference for people walking in. I think a huge amount of efficiency will get passed on both in terms of distribution cost saving as well as underwriting cost savings, as well as the cost incurred in issuing a policy, because you could have a single policy covering everything. It could mean a significantly large amount of benefit for customers as well as companies put together.
No, so I agree with you. So going forward, and maybe an unfair question to you, and possibly you don't have to answer the unfair question, how ready is the industry? You have a life insurance within your group, you have a health insurance company, maybe you don't have a general insurance company, but when you look at all these three structures of the industry, how ready is the industry, particularly industries of different sizes and ownership structures, to actually operate as composite entities? I mean, you've got the PSUs who probably have challenges of capital right now. You have large companies with, they're with Indian ownership structures very high, and so where do you see, how prepared are they, or how prepared can they be, or will they be?
Yeah, I think the idea is good. We have to see the fine lines through which the composite license regulations will come in for evaluation. You said I have a choice not to answer the question, but I'd still do, because I think the thinking process is to say, let's make it more complicated. You have a life insurance license and you have a health insurance license, and your joint venture partners are different in both of them. Yeah. But I think from an opportunity point of view, would I as a life insurance company be interested in doing health? I think I would. Would the health insurance company in the stable that we have be interested in doing some bit of life insurance, maybe specifically protection? I think the answer could be also yes. And for the kind of penetration levels that you're speaking about are so low that worrying whether there will be too much of us reaching the same guy. I mean, we are far away from that problem at this point of time. I don't think we have a situation where we'd worry about we are building too much cost into different companies for being able to deliver the same service. As long as the back end remains common, if there's an opportunity available, I think even people with independent licenses in their group, doing health and life separately, may find it interesting to pick up some pieces of it, not the whole piece. Health would be interesting for a life company. Travel could be interesting for a life insurance company. Protection could be interesting for a health insurance company that completes its suite. The bigger question would be, would one do it all? I think I don't know that as yet. But would everybody want to pick some pieces which will augur well for distributors as well as for industry as well as for customers? I think the answer to that question is yes. The only thing I worry about is it's not same business, okay? Life insurance companies manage interest rate risk like nobody's business. I mean, the outstanding of FRAs today in the marketplace is about 3.5 lakh crore, and we talk about giving guaranteed savings interest rate for about 30 years, 40 years. We run annuity products where whole life we give guarantee, which is what health or general insurance companies haven't done. So it's very different kind of a business altogether. Operational intensiveness for life insurance is different when they want to get into health insurance, because the number of claims I pay in a year, more than that maybe the health insurance companies pay in a month. So it's not the same. So I think as long as there is risk understanding well to be able to deliver, my sense is the opportunities are immense in the current state. Before even worrying about should both these companies merge together and get into one, or, but standalone basis, I think when it comes in, depending on if the fine lines are not too difficult to manage, I think opportunities will unfold.
But are there conversations around the board? Are there conversations around the composite license? For example, in your case, you have a life and a health. There are some companies which are just life, right? So would it therefore attract new players who would therefore seek a license and have all three, versus standalone companies which do not have something else but possibly have one part of the industry? Where do you see that shifting? Do you see interest of a life insurance company, standalone life insurance company, looking at possibly getting into health and general? Or would it be composite, where I'll just be life and health, I'll not be life, health and general in terms of the product offers? I mean, is there any conversation? I know it's too early, but if it has to take the shape of a transformation in terms of looking at the larger interests of 2047 insurance for all, then the whole gamut of the composite license strategically should be oriented towards, hey, how does it help me with my underwriting, actuarial, common services? How does it help me with risk-based capital and therefore capital efficiency? And how does it look at in terms of efficiency in audit, compliance, and so on and so forth, right? So there's a technology aspect, there's a risk aspect, there is a solvency aspect, there's a capital aspect, and therefore, where do you see the synergies getting unlocked?
No, I can tell you that we are providing a lot of business to consultants as we speak on evaluating these opportunities for sure, and that's true for a large number of life insurance companies as well as general insurance companies out there in the marketplace. To your question, we still don't know how the solvency thing will kind of pan out. We still have worries on the back of our head that, for example, some of us are not listed, but there are listed players who would worry about what would valuation look like in the post-scenario world, because health is a little simpler, the year is over, combined ratio is fine, and you've made the profit, whereas life insurance work on VNB multiples and so on and so forth. Life insurance companies will move into IFRS regime 2 years from now, and that's a big change. So to that extent, whether intricacies are being looked at, because we don't know what will come in the fine print, but like I said, from an opportunity point of view, evaluation, I think is happening across the length and breadth of life and general insurance companies. My view is you will see a few mergers. You will see an opportunity of some people combining together. You will see valuation in boardrooms to say if you have 2 licenses of life and health, will that be up for evaluation to say whether you need to have one? May not happen immediately, because I think there is opportunity for both to pick up some pieces and do for a period of time. But eventually, will it move to one or no? Because at least the broad paper still says that you will still have independent lines under one composite license. Solvency norms, whether they will be fungible between 2 of them, that is still not clear. You may be carrying excess solvency on life side. Can you transfer that a little bit on the health? We don't know, and I don't think the regulator will be comfortable doing that for sure. But my sense is people who don't have We'll look at opportunities to merge with people who are standalone on both sides. People who have licenses in the same firm will want to look at the opportunity standalone, pick up a little bit of pieces and see how it works before evaluating 1 or 2 years down the line whether you need to put all of it together again or not.
So obviously, okay, clearly from what you're indicating, there are a lot of clarity that still needs to be understood, and from a regulatory perspective, unless that clarity doesn't come in from a strategic standpoint, what calls to take will be. But let's say everything were to happen and things are clearer, what are some of the risks you see? There are, obviously you're talking about selling, and there are risks of selling from an agent understanding and so on and so forth. Then there is always, again, in terms of cross-subsidization of product lines and therefore what could happen. What are some of the risks that you see? I mean, potential risks that you see that insurers need to be careful about, because at the end of the day, insurance is all about risk. And while at one end is all about distribution and end mile reaching the product, but essentially backwards is all about risk, right? And therefore, what are some of the risks that you see in a composite license? And what do insurers need to be worried about and be careful about?
I sit up as a member of the Executive Council of Life Insurance Council, and when this discussion was happening to say, should we move the idea of value-added services that agents should be able to do beyond what they do in life insurance? And my first reaction was, if we learn to do what we are supposed to do well, that's more important than trying and seeing whether we can do more or no. Because some of them may not necessarily be related. Imagine agents getting into starting and selling loan products and mutual fund distribution and so on and so forth. I think the biggest risk to me, which is something that is an issue or perceived issue in the insurance industry, is, are we selling the right products?
Correct.
Is the customer understanding the products that we are selling fully well? Is the line between the lines known as well as efficiently as it needs to be known? My sense, the biggest risk in composite will come in is to say, I've got to do two now together at the same point in time. So my sense is training will become a big issue because you got to deliver on the promise that you are meeting to the customer. Little easier on health because it's a short-term product and life is significantly long-term. So I think that is going to be a worry as far as distribution of the product is concerned through the intermediaries that we do. I think the opportunity it will provide the composite license provider is the ability to be able to go direct. Today, digital platform communication on some of these products is not very high, is not very large. Very few people, and you can say Policy Bazaar perhaps is the largest guy who can talk something worth its while of what it does direct. If you move to solutions, you will have the opportunity of being able to put up your solution which can take care. So I think from that point of view, there could be an opportunity and that can bridge some gap of the fact that we don't go as direct as we need to and all other investment products when they've gone direct have had a huge benefit, including mutual fund, which does now a direct scheme meant for people. To me, on the risk on the fundamental core business will hopefully get a little better. Because today the underwriting that we do, and we use a lot of ML and AI in the underwriting process. Today, if that access to information is on both health and life and on general, I think the underwriting processes will become more robust. My sense is the ability to be able to pay claims may become significantly easier, may become significantly faster for composite license kind of providers, because at the core of everything that you do, information or misinformation or not having information are the differentiators between being able to execute a product or a service or a solution significantly better. And my sense is the amount of information availability on this platform will be significantly higher to be able to make sure that we'll be able to deliver on that to a customer significantly better.
So two more questions. One is from the technology side and the other from a perspective of where do you see the role of Insurtechs, HealthTechs as a composite model helping in the overall delivery of products and services? And secondly, from an operational standpoint and leveraging technology, we spoke about AI, we spoke about ML and underwriting. Obviously, there are other issues of CRM, there are issues of productivity, there are issues of data lake, information, data, and so on and so forth. And as it is said, that if you're not bringing in technology into the system, then you probably are way behind. And a lot of the insurance companies are navigating from legacy systems to new age systems. So in this overall process, where do you see the digital architecture playing a role on the processes, on the end consumer delivery, and therefore what benefits do you see from an overall valuation structure, the point that you alluded to?
I think the Insurtechs and HealthTechs will have a significantly larger role to play here. I must admit, as we speak today, a large part of the core system belongs to the insurance companies, but everything else which is customer enabled is actually run by Insurtechs today. Our entire prospecting system is driven by an Insurtech company. Our underwriting is driven by an Insurtech company. Our claims execution process is delivered by an Insurtech company today. The ability for HealthTech and Insurtech to come together to be able to provide more solutions in a composite regime, according to me, will become significantly better, not just on process. The ability to be able to bundle products together, which is a big pain for people in not having the same license, because if I have to do something with health today, either I can do it as a combi product or a combo product. Combi is, one of them is to just try, the other one you have to file with the regulator. The ability of tech and Insurtech and HealthTech to be able to bring some of these products together on a platform for delivery on a composite license platform, according to me, will become significantly better. Underwriting systems will become significantly better. Claim systems, according to me, will become significantly better. I still don't have an answer to the core system that we use, because I mean, life insurance, unfortunately, there are only 2 core systems available across the entire Asia. Health is slightly better. I don't know the answer to that question, but like I said, customer facing, whether it is prospecting, selling, underwriting, or the eventual proof of the pudding of claim, my senses will become significantly better on tech and insurance.
So shifting and coming towards the closure of our conversation, we're talking about a composite license, we're talking about 100% FDI, right? So the entire landscape of the insurance industries is clearly seeing a huge transformation. How will the composite license and 100% affect market dynamics and what could happen? You know, I'm just saying that all of us have built legacy institutions, and where does this 100% FDI and composite license, how will you define valuation? How will you define market size opportunity? Who will be considered big? Who will be considered not so big? I mean, those dynamics, I'm just saying, it's a very interesting, I know we don't have answers, but it's a very interesting aspect in terms of, will it change the dynamics of the insurance industries? Will it transform the insurance industries going forward?
Okay, I'll do a quick one because the timer has already got red. I think on 100% FDI, I traveled with the chairman to pitch to people in the US and Europe, and everybody was obsessed about getting 100% FDI. And management control as a requirement of the new regulation. I don't know whether in India, for the market that we are, just having 100% FDI of a very large player will serve the purpose of what doing insurance business in India. I'm not sure that that will drive more people coming in. I'm told 1 or 2 people are interested because some of them met me, and I can say too few people are interested. I was surprised to know that there are more international companies for insurance in Thailand as compared to India. And that was we were pitching and saying the dynamics and the opportunity is significantly higher. So some will come in for sure, but partnerships in India are critical. I think composite, the question that you asked, and I think we are, without reading the fine lines, I'm putting my faith on this, because I think the regulator over the last 2 or 3 years has completely been focused and obsessed about either customer or the penetration of insurance in the country. My view is composite licenses and the unfolding of that will be a bigger and significantly larger opportunity for insurance penetration in India as compared to the 100% FDI that will come.
So lastly, so therefore, I mean, what will distinguish the market leader? Will it be product depth? Will it be brand trust? Will it be tech agility? Will it be a combination of all? Because embracing all of this is also a route to penetration, right? And therefore, what will define, or is it a combination of all? We talk tech, right? But I'm just saying there are insurtechs that have done some great work in terms of distribution, but I'm just saying what will define the market leader? One answer, don't have to.
I think size will still make a difference. That will be the big differentiator. The only thing that has not happened in the insurance industry in life, at least for the last 3 or 4 years, is we've grown at 10-11%, but number of policies haven't grown by 10-11% at all. In fact, they've remained flat. I think the composite will provide an opportunity not just in terms of the size, in terms of value, but also it will provide a disproportionate size of the number of customers or policyholders that you can have. And that put together, according to me, will determine how big or good or how large you are going forward.
Thank you, Kamlesh. Your closing remarks, and then we'll your closing remarks on the topic, and then I'll wrap it up. Thanks for a lovely conversation, but your closing remarks.
Thank you, Suresh. Like I said, we are very excited as to what is the next string of reforms that, like I said, will come in. I just think from a product-centric company or a distribution-centric company, composite license will provide an opportunity significantly for us to move to a customer-centric company and a solution-centric company. And if that happens, I think the size of the opportunity in India is amazing. I don't think there's any other market which provides the kind of opportunity for growth as Indian insurance markets provide. And with the awareness campaign being done by General and by Life, and I'm told the regulator is going to come with an awareness campaign of its own. I'm only hoping all of it is now, the entire universe is conspiring together to be able to make sure that the dream of insurance for all by 2047 will become a reality. This will mean a need for growth at a sustained pace, and I think all the insurance in the industry is looking forward to use this opportunity to make sure we will have a Surakshit Bharat by 2047. Thank you.
Yes, yeah, thank you so much. And just building on that, I think the larger takeaways from the conversation that we had right now are the lessons that we need to look at. And some of the lessons that possibly a composite license will enable us is, one is the use of technology, and how can we have a digital-led innovation around products, services, around what we do in the entire insurance industry. The second is in terms of product offer, and more importantly, moving away from the standard products to more embedded protection, and how do we look at products from that perspective. The third is in terms of capital efficiencies, and that's a big problem, big challenge as far as the insurance industry is concerned, and then therefore a risk-based capital will start helping in terms of allocation of capital to multiple industries from that standpoint. And fourth is unified service, and all of it combined together will help in operational efficiencies, which will then lead to better valuation, better customer service, more efficient processes, and thankfully great innovative products that the insurance industries will eventually give, not just for life, health, could be farmers, could be gig workers, could be a whole host of people. Thank you very much, Kamlesh. Enjoy the conversation. Please give Kamlesh a big round of applause.